Hello, everyone. Who's ready to have a good week? Alexandra is, I know for sure he is. Forex Gal, collect aluminum. Well, Maynard G. Krebs would be a multimillionaire today. Most of you probably don't know who he is. So he was in Dobie Gillis. That was his hobby, to collect tinfoil, big tinfoil ball he had. Hello, Richard. Ryan, how are you?
Morning, Dale. You good?
How are you? Sinatra, how are you? Goryeshi, Alexander, for sure. All right. Okay, so Forex Gal remembers Maynard G. Krebs. You don't. Hi, Amira, Patty, everybody.
Good morning. Good morning.
Okay. Good morning. All right, so dollar stiff. Everyone see my dollar chart? Got it? Okay. All right, so let's start off with euro. So euro's approaching this pivot here. And last week I talked, maybe you could pull down here and put in some type of right shoulder. This is really a pretty big test, could take it out by a little bit, maybe go 1720, but any kind of bull case, if we start really closing under here, you have to call it into doubt. I think one of the keys is going to be whether or not Europound makes a new low. And we're still about, 65 pips away from that. Getting a nice pop in US dollar yen. So which way do you think it's going to come out of this little range here? I don't know what you guys thought about how the S&Ps closed last week. Talked about the 2-week off number at 44.11. It definitely took that out, and it's going to have to rally to negate it. So this could just be a bounce if you want to break it down. And Jays, I agree with you. And you know who else agrees with you? Gregor Horvat. So you have some good company. So if you believe this was the beginning of the topping process, or you believe the reversal that we had, the off number was really, he had a couple opportunities to trade it. I'm thinking between 90 and 4,500 should sell this rip. And in NASDAQ, I'm thinking, around this this old support right here, 40 to 80. Looks like a decent level. Where did I have that? Yeah, I think you could see it here better. Yeah. So 540, was support before we really sold off. 540 to 580. And you're wrong over the high of the move, which was, I think 15,700. The Dow has been the weakness. And, everyone keeps waiting for the Russell to play catch up. And I don't know if it's going to play catch up here, After this breakout, it's sitting right on it again. We've had so many false signals. I still think this is distribution. In fact, I'll be able to ask Katie Stockton today, who's going to be our guest today. I saw her on CNBC last week. She was talking Chipotle. When she comes in here, she talks more about, things that we look at. So stick around for that interview. And the gold. So if the end's going to make one more move, it shouldn't be positive for gold. And I'm still waiting for this pullback down here, waiting. See if we get one down here into this range. I think you have to say right now the gold is fighting the strength in the dollar, and that the euro's almost there for what will be could be a right shoulder, whereas the gold is going to need some more downside pressure. I think that's about all I wanted to cover this morning. Any reason for EG and the euro showing relative weakness to cable today, Ryan?
No, I'm not sure. It seems to be a bit of a euro story all round. The crosses are off, as you said, the euro sterling, euro yen, euro dollar off. On the flip side, dollar Swiss is up as well. Sterling yen's not doing much. Okay, we've had a little lift in dollar yen. That's still not doing much though. So it looks to be a bit of euro weakness just creeping in. I see no real reason for it. We had ECB Schnabel out earlier. She was, in my mind, a little bit hawkish, as Germans tend to be, on warning about potential fastening of getting to their sustained 2% inflation target. But she's still in the transitory camp with inflation. So I'm not sure. So I think we're just going to watch the levels here. We've got some stops in play if the 85 handle goes in euro sterling. That's something to watch. The sticky area has been sort of 85 down to 84.80. We can't get a close below there or a sustained move below there. That's really the level. If we get under there and really put in resistance back at 84.80, 8500, then we might get a shove down to the lows and, talking me book, hopefully a shove lower.
Yeah. So I don't know what the weather's like there, but we're heading into fall. Crude looks like it's trying to break out here.
Yeah, still a bit reeling from the hurricane stuff, I think, and the port delays and all that sort of stuff still in play. And it is it's edging up, isn't it? It's not looking blowy like oil can be. But one to keep an eye on, but that isn't really putting any feature on dollar CAD today. You would have thought that oil creeping up would put a bit of pressure on dollar CAD, and dollar CAD's just asleep.
Yeah, and with the yen up a little, gold's still up 3.
Yeah,
and yields are down.
Yeah.
So I mean, a lot of the correlations aren't connected today.
No, and I was looking at the bond positioning in the 10 years. The CFTC stuff.
Yeah, what COT?
This morning. No, CFTC. The futures positioning, and that's showing a lot of indecision. The speculative traders were long 113k 3 weeks ago, then they were short 30 odd k 2 weeks ago, and now they're long 780.
So they keep chopping around, flipping around too.
Yeah, so they don't know which way bond yields are going, and that's if you look at the yields there all through August, September, we've had some ranges, but pretty tight, and it's just continually going sideways. I don't know if if this week's going to be the last week of summer, and then next week into the FOMC we kick on, start seeing some proper vol coming in. But I mean, even the options today for the week, I do the options report on a Sunday night, covering the whole week ahead, anything that stand out. And dollar yen, the biggest strike for the week is 110, and there's around 1.4 billion off total over the whole week. Usually that's 2, 3, 4 billion. That's a quiet week, and so to see 1.4 going off, and that's the biggest strike this week, it doesn't bode well for volatility.
Okay, and any views to wrap before I move on to some of the other guys about what happened in S&Ps, this little pullback we had last week? Just another one before new highs, or anything different?
Yeah, I think if you look at the daily chart, you've got the moving averages walking up alongside it. I think that's got to be your key. If we start breaking those, we got the 55. I don't think it's too far away. Got the 200. If we start breaking those, then we potentially got a more of a correction on the cards. Otherwise, we see a dip 10, 15 pips below and it bounces. It's BTFD, as they say.
Yeah. Okay. Stel, good morning. How are you? I don't know if you're here
I'm
today.
very well. Actually, give me 2 minutes. I
Okay.
have something I need to take care of.
Go ahead, buddy.
Right back.
I wonder if Steve Volke is here today. Hi, Steve. So, Steve.
Just you and me, mate.
Oh, okay. Oh, and Blake is on vacation or something?
No, Blake's here.
Oh, okay.
Vacation. Who's on vacation? When does Blake take vacation? My God.
You snuck one in this year.
No, I don't even know. I don't even know what you're talking about. How you guys doing?
All right.
Yeah, okay, mate.
How's it going?
Fine. Yeah, I'm doing good. It's my wife and I, we celebrated our 18-year anniversary this week, and
Well, congratulations, buddy.
Yeah, congratulations,
thank you.
mate.
Yeah, it was. It's you should congratulate her for being with me for 18 years, married. Now we've been together for like over 21 or 22 years, but it was nice. We had a nice dinner. It's still pretty unbearably hot over here, and I'm sure it is for you too, Dale. So
Yeah, it is.
Yeah, it's.
Do you know what they say over here, Blake? When you've been married that long,
What's that?
You get less time for armed robbery, and you probably end up richer.
Really? That's what they say?
I've never heard that expression before. It's a great one.
It is. Ryan, you've been with your wife for probably about the same length of time, somewhere in that neighborhood, right?
Yeah.
It's good news is we won't be armed robbers together. So that's good news. You had mentioned a little bit earlier about the euro sterling, and I was looking at, we're at the 618 retracement, by the way. I think this is like a continuation move of last week. I mean, last week was pretty big breakdown, with the ECB. So you probably got a lot of, follow on, people tried to buy this dip down here. I mean, I'm still long some, and I'm not worried about it until we get below 85, but we're getting close to 85. You can see I got a bunch of alarms set up there. But the thing is I would assume that a lot of this was just leftover from last week, just not getting any follow through, any type of bounce. And the euro's trading pretty heavy. But one of the things I also wanted to mention today is, you said something interesting, Ryan. You said that, summers are now wrapping up, and this might be our first full week, right? This week.
Yeah, coming into it.
Yeah, it's interesting. I got an email, or just because I'm on the Traders Summit site. You guys probably know I'm doing a lot of interviews with some of the key people. By the way, I hope you guys got a chance to listen to Mark Chandler's interview. It's right here on Trader Summit. It's right on the front page. But I do these interviews with these guys and gals, and I had two people in the UK actually just send me emails this morning like, "Hey, we're back," like back from holiday. So it's you're probably going to get a lot of people that are coming back this week too.
Yeah.
And I know most people in the United States are like, well, Labor Day weekend was not last weekend, but the weekend before last. But, so everybody's coming back. But really, it was really the last week and this week that people are just getting situated back in front of their computers, trying to figure out what they want to trade, and, volatility is picking up. So, but do most Europeans, and I'm going to ask you, Ryan, and maybe Stelios if he's listening in, do most people just get back from holiday like the first couple of weeks of September?
Yeah, I think with the virus stuff, they're doing staggered school starts, different years, and that sort of thing. So I think it's a bit different this year. My kids, this is their second week back. I know kids who have just gone back this week. As you mentioned, Stelios mentioned earlier, Greece has gone back to school this week. So I think it's a similar situation around Europe. Things are going to start picking up, definitely. Even if this week's still a little bit quiet, next week we're into the Fed. We've got the BOE coming up as well. So it's all going to start picking up, and volatility will jump up, and off we go. And hopefully we get a busy end of year, because it's going to be important.
Yeah, I'm really hoping we do. And Dale, you had asked about like the price action on Friday, and I mean, I think this is part of that puzzle, if you will. Here's the S&P, right? And we talked about the S&P in this ascending wedge. Personally, I just don't think anything's going to happen until we get out of this wedge. And we did bounce actually on Friday, or today rather, off of that wedge support. And I actually redrew this a couple of times. Let me just kind of show you what I did. First of all, if you take this low here in March of 2021, and then this low right here of June of this year, then you pass through both of those trend lines and you'll reach actually Friday's lows. Right. And if you really want to be a stickler to this, this trend line, I didn't mean that to happen. You grab this trend line and draw through the two false breakdown spike lows, and that's going to take you really to, I'm going to assume that's really critical support now. In order for the market to stay elevated or stay bullish, that's got to hold now. So, Dale, you asked about like Friday's close. How did everybody feel about Friday's close? I think it was, and we were talking about this in the chat room on Friday. It's like we're on really important support. It's hard, and I was writing with. And I know Amanda took some profits down there and off some positions. And I was like, man, you guys got to realize we are on really key support here. You can't be chasing the market on a Friday right into support. You just can't. I mean,
the Dow actually broke it, Blake, and the Nasdaq's way above it. But
yeah, so I mean,
channel.
What's more important? 30 stocks in the Dow or 500 stocks in the S&P, or the NASDAQ composite when you've got, 2,000 stocks or whatever the number is there. I mean, I just, in my opinion, you got to let the broader market break, especially in such a bullish move. You know what I mean? So I don't know. I still think that there's some divergences out there, Dale. And I'm thinking we're probably closer to breaking lower now, but at the same time, you got to be a little careful. I mean, buy support. If we're buy support right now, the risk reward is to actually be on the long side, not on the short side, right? And that was the case on Friday. And we continue to see moves here, but there are things that are worrying me about. A continued rally in equities. One of the things that sticks out like a sore thumb to me is the dollar index. The dollar index is actually quite strong, and I think the dollar, continuing to show outperformance is important, and also the yen. I mean, you look at the yen. I know the yen's a little weaker today, but you would think that the yen would be a lot weaker with stocks where they're at. I mean, just over the course of the last several months. And then, you take, and I know I've mentioned this on, in nauseum here, but you take like the dollar Mexican peso, we are not breaking down. And we've spent all of 2021 above pretty critical support. Now, eventually it should break down, especially if stocks, whoops, I didn't mean to do that. If stocks, let's say the S&P, makes a move to 5,000, then you would think the dollar Mexican peso would eventually break down. We'd see some, emerging market currency strength, but that's just not the case right now. And so, there are things like that are definite warning signs about being long risk or long stocks. But at this, and I guess you could say the same thing about the Aussie. I mean, the Aussie is weak as well. But we have to respect the fact that the S&P is at current levels and at highs and holding. And let me just redraw then. The way that the trend line was originally drawn, for the last several months that we've had, we are holding that really key level support. So, and that I think we have to be respectful of. So, I don't know if it's my bad. I don't know if Stelios.
I'm here now.
Oh,
Sorry about that before.
No problem. I don't know if you have anything that you wanted to mention regarding
Mine.
What?
Regarding, sorry.
Regarding anything actually now.
Anything. Well,
I know you were busy handling an issue.
Yeah. No, it's all good. Well, first of all, first day at school here, so I'm very, very happy I don't have the kids here.
You know why you say that, but I'll tell you, my kids are getting closer and closer to leaving the roost. And you know what's sad about that is I actually had a dream about it last night, and it's going to be a long couple years if I keep having dreams that my kids.
I don't know about you. I'm going to be sailing the Mediterranean when they leave with my wife. Anyway, so markets. It's all about inflation. We have quite a few readings this week, and it seems to be sticky and not transitory like they're all claiming. And that ECB official, I can't pronounce the name, who said that if the inflation readings go above our target, then we're going to act decisively and all that. And I'm like, yeah, it's 3% already. Where are you? But it's all about inflation, and I stand by what I've been saying. I think this is going to be less transitory than these guys think, and central banks will have to do something. If they don't, then they will have basically lost the fight, and that's not a good thing to have. They have to tighten. They have to do something to contain these. Yes, there will be price action consequences in equities, in everything, in metals, everything. So they're going to have to do it. But for the moment, equities like the fact that things are as they have been for a while. The Fed has been talking about the taper, but they haven't given us anything. Okay, next meeting apparently is the meeting when they're going to announce exactly what they're going to do. But for the time being, nothing's changed, and yields are low, and that's what drives me crazy more than anything. Inflation in the US, hitting 4 or 5%, whatever it is, 3% in Europe, and 10-year US at 130. That makes no sense to me. So the markets are convinced that this is going to come and go, and that COVID will be contained. I actually agree with that eventually, and but I don't think inflation is going to be dropping that quickly. So I want to be short bonds. I'm not yet, and I'm still patient, and I think the market will come to me. But otherwise it's very difficult to have a view on something. There's no clear sense of direction yet. The market is just grinding like it has been grinding for weeks and months and years, really. So until something changes, I'm sitting on my hands.
All right. Well, thanks for the update, Stel. And you had mentioned some of the comments from the ECB members, and I know you and Ryan had discussed it, or Ryan was discussing it a little bit earlier. And Ryan, I want to ask you this about the ECB and about actually more about Germany, because you were talking about the German ECB members and their comments. But what do you think this is going to happen with Merkel? Moving forward with like Germany, just in general.
Yeah, I think it's Scholz is looking like the candidate to take a place, and that should be pretty much a continuation of Merkel. Obviously, he's going to set his own stall out, but I think it's largely seen the market to be pretty much a continuation. The question is whether the party itself can hold on to power going forward. What with all the vaccine stuff, because that's obviously become a big political football. But inflation's already becoming political in Germany, as it often does. Headlines screaming about it over there, and that's going to pressure the Bundesbank members, who are ECB members, who are probably going to start turning a little more, I wouldn't say hawkish in terms of ECB, but warning against inflation and the need to protect against inflation, because that's ingrained in German culture. We mustn't have inflation. It's dangerous. But
yeah.
Me and Stell had the conversation earlier, or he replied to a tweet I put out on her comments, because she was saying, if it gets sustainably to 2%, and he was like, well, it's already at 3%. And then, what do? They switch what they talk about. So instead of talking about the headline inflation, which is 3%, they move to the core inflation, which is 1.8%. And, it's the little trick. And Draghi did that as well. When inflation got too high, they started talking about core inflation. That needs to be at 2%.
Right. Okay. All right. Well, thank you. Thanks for your comments regarding that. Dale, I know you're going to be taking the helm here in just a few minutes regarding the interview with Katie, but I wanted to talk really quick about Norway. Norway's got an election today, and they're both of their, I guess it's the Labour Party and the Conservative led government is what we were looking at, but the fact of the matter is the Labour Party might be moving away from like fossil fuels, and as you guys know, Norway is very dependent on what happens with crude oil and their exports of fossil fuels. And I learned that 5% of their workforce is actually the sector actually employs like 5% of the workforce, the whole oil and gas industry. So Stelios, do you think that this election might have any impact on the US dollar, Norwegian krona? I've been watching it very carefully because we have this big double top and it's not playing out lower. It should be, but it's not yet. And I think that maybe some of that hesitation has to do with the elections that are today.
Yeah, I think that if the opposition do win, then definitely there's going to be an effect on markets and on the krona, because, like you said, oil and gas is a huge part of the economy, big part of the economy. But on the other hand, in the long run, I've made my I've talked about Norway as a country quite a few times. They've been smart. They've been putting away their profits basically from selling oil all these years. They have the biggest sovereign wealth fund in the world. And it's actually fun to compare. You have countries like the Emirates, who basically are building cities. They're making Dubai this huge place and all that. And the Norwegians, they're just putting away the money and investing it. So at the end of the day, they're going to be fine. And if they do reduce their refining and their basically their dependence on oil and gas, then they're going to do something else. What is that? I don't know, but the point is that I think in the short term there's definitely going to be an effect on the krona. That's what I think. So we have to wait and see the result. And maybe, you've been talking about the dollar being resilient. Maybe this is a trigger that this is waiting for to actually bounce off the support and just head higher above resistance, and who knows where. I'll be looking to sell this eventually, but not until we get to 9 or so. Those highs over there that you've marked.
Yeah, it's gonna be interesting, because I think if we can squeeze above this 875 level, then that's gonna it's going to create a little bit of a short squeeze, especially, for those of you guys that are paying attention to the US dollar, Norwegian krona, I have to imagine there's a lot of people that have been shorting this, and looking for a big breakdown, and they're not getting that big bang for their buck. And remember, this is a big cup and handle breakout point. So, we start getting back above like I said, 875, and we might get a squeeze back up towards 9. And maybe that's where we go, and hit Stelios's number. So,
just
Dale,
one thing.
Go ahead.
Sorry,
go ahead.
Just one thing quickly on the NOK. If I recall correctly, and I'll check this out with my guys, that the Norges do their adjustment, I think, in October on their NOK buying, because they they obviously do a lot of exchange to do with their well fund and the oil and everything. I think it's October when they can sometimes adjust how much they're going to be buying, finalising it off, if you like. So that can sometimes, if there's a big deviation there, that can have a little play on knock. But as I say, I'll check out the exact date when they do that, because I say it can have a little temporary input into how knock moves.
Awesome. All right. Well, thank you very much. And I'm sure everybody in the Forex analytics community, especially in our chat rooms, will appreciate that. And yeah, but you guys at home watching on the Face webinar, keep in mind that there is an election that's ongoing right now in Norway. So for those of you guys that are going to be seeing myself, Steve, Stelios in about 45 minutes, we'll see you on the Face webinar. For the rest of you guys and gals, make sure you visit our webinar sponsor. Go to Forest Park FX, and if you're not getting a cashback rebate, if you're trading, you should be, or in a reimbursement program, so you can try to get Forex analytics for free. Make sure you visit them. You can contact their email or their Skype right here from our website. But they're our webinar sponsors. They're the reason why this all happens. So thank you very much, Stelios. I'm not sure if Steve ever popped in, but Dale and Ryan, thank you guys. And I'll see the Forex Analytics crew. I'll see you guys in 45 minutes.
Thank you, Blake.
Thanks, everybody.
Thanks, guys.
Thank you, Stel. Thank you, Ryan. Thank you, crew. Hello, Dennis Geekus. I haven't seen that name for a while. Katie, welcome back.
Thank you, Dale. Good morning.
So glad to have you back, Katie. You want to share your screen? I love your technical work, and I also want to tell you I want to congratulate you on fine spot you did on CNBC last week talking Chipotle. You're bullish, so I assume you and all your friends and family were eating at Chipotle this weekend.
There you go. Yeah, eating the book, right?
Yeah, well, you really, you were really good on television, Katie. So
Thanks so much, Dale.
if you want to show your photo, we could pretend we're on TV.
Yeah, there you go.
All right. So, I was asking the question before, and it looks like you're going to be answering it. I thought last week's action, I do a thing like a 2-week reversal if we close under the prior 2-week close, is somewhat meaningful. And we had one of those in S&Ps last week. What's your work saying here? We're bouncing today. Is this a rip to sell? Or was this just another, harmless little pullback that just was another, 2-3% pullback to buy before new highs?
Yeah, it always feels so much worse, doesn't it, than their percentage decline would indicate. I mean, that the S&P 500 is down 1.7% as of last week, and the Nasdaq 100 index, despite a 3.5% down day in Apple, it was down 1.4% on the week, right? So the very modest pullback here. And what that has done that's been constructive is that this overbought reading, if you can hopefully see this on this stochastic oscillator,
we do,
has been relieved, right? And notice where past pullbacks have held, and it's not an oversold territory. That would be going back to May, that we'd have to find that last real oversold reading. But you're getting these upturns, and these upturns have been great little short-term buy triggers. So we don't have that as of yet. It usually happens with a lag of a day or two in terms of the actual tradable low. So we can't be convinced that this pullback has totally run its course. But what's good is that we've seen that relief short term from the overbought reading, and that's happened well above the
cloud
levels, the cloud, and even the 50-day moving average, which let's call it about 44.25. The cloud is a more important level in my work, and obviously both are very much intact.
43.50 would take it back underneath the cloud, Katie. Just curious.
Yeah, and it's a moving target. Let's call it 4,300 as it stands. But looking out a couple of weeks, we're talking about 43.22. So that level is important to me. But what's also very important is that we still have the trend following gauges pointing higher. So that this is the MACD indicator on the daily SPX chart. You can see it has a sell signal. It could be certainly worse than it is. But we also like to adhere to this 20-day moving average, this blue line here. And generally speaking, as long as it's kind of pointing higher and hasn't rolled over, we're in pretty good shape. So it does say we need a bounce, today, tomorrow, the next day, really, to preserve that uptrend in the 20-day moving average. So that's another risk metric that we're watching. And as it stands, it's still reflecting the momentum behind the market. So no big structural issues as of yet.
So here's how I see things in relative strength terms. Actually, the Russell 2000 still hasn't made a new high. There have been several attempts. So I would probably rank that as the weakness, although the transports don't look good. But I mean, the big averages, the Dow actually, and I know it's only 30 stocks, but took out an uptrend that it was in. So the Dow seems to be the leader right now, followed by S&P and NASDAQ still. Let me ask you this, Katie. I'm interested in your reaction. A lot of people buying the mega cap tech growth stocks, and the reason it shifted from earnings and everything else to it being they're safe stocks, because if there's any problems with COVID, they still have earnings, they still make money, and if the economy improves, they'll even make more money. So I kind of get this queasy feeling in my stomach when I hear an oxymoron like safe stocks. Do you think that people are, too sanguine about what's happening in the FANGs and MAGAs? And do you think Apple is just an isolated part of it, because there are some other parts of FANG and MAGA that aren't doing great, like Amazon? Amazon had that terrible earnings report, Katie, and we haven't been able to fill the gap. We've eaten into the gap, but looks like we may not fill it. So I'm interested in your take on that.
Yeah, I mean, the FANG stocks, plus Tesla, have really outperformed over time and even more recently. So I don't see any real problems there in terms of their trend. When we see that this kind of outperformance, especially from Apple, well, a retracement of some level is inevitable, right? So I think that's what we're seeing from Apple. Here is the ratio of the FANG plus Microsoft, in this case, stocks to the S&P 500. This is the run up that we've seen. So to see some kind of pullback, I mean, that to me is fine and somewhat of a natural development. And just to keep it real with the FANG stocks, here's your trend. Still has long-term momentum. So really no issues there. Facebook looks great. Netflix has a major long-term breakout. It's Apple, Google, and Tesla that have some issues based on our trusty DeMark indicators. And I'll show you on Tesla because it's timely and is something that people might start to worry about. But I want to, suggest that they probably shouldn't worry. And it's in part based on the fact that we've seen that outperformance, but Tesla got overbought, and it got overbought near a key Fibonacci retracement level. So here's the Tesla daily chart. If you take the Fibonacci's, it's right up into this 61.8% retracement, which puts resistance around 762 to 763. And then for those of you who are familiar with the DeMark signals, this is a sell signal, and it's really the first one that we've seen since Tesla bottomed in May with most of high growth. So it would be very natural and healthy to see a pullback come into kind of this zone, and that would not damage the intermediate term uptrend and the chart at all, but it would relieve this short-term overbought reading and downturn. So I just think we have to keep in mind that pullbacks are sometimes necessary evils and not necessarily the start of something much worse. Well, what we're watching more is like a risk metric more broadly. And in our morning note, actually, we acknowledge the seasonal influences that are so weak in September. And that's a real phenomenon. But to me, it's much more important to have an understanding of where the trend following gauges stand, where momentum stands, because that's real, right? That's price. And one of the risk metrics that I think is easy for folks to watch, and is sort of a circle back to your question about sentiment, is the VIX. So the VIX is a
Okay.
transactional gauge of market sentiment. It's not telling us anything, bearish right now. Where it starts to do that is when you see the VIX clear 25. So this is what I've been watching. Here's your kind of low volatility regime. This is on a weekly bar chart of the VIX.
Yeah.
Clearly no reversal of that. But if we were to clear these highs around 25, that's where you start to think about perhaps we're entering into a higher volatility regime. So I think that's one good,
Yeah, I
easy
do
metric
too.
for folks to watch.
When you look at the VIX chart, Katie, does it, look to you like, it's kind of strange how we have these days where it looks like you have a breakout, you have huge moves, 18 to 28 in 2 days, 3 days, and then gives it all back up in a few weeks and then tries it again, gives it back in a few weeks. It's almost like there's, some instability in the structure with the way, to have those moves happen in 2-3 days and give it up. It's almost like the market feels like it could be vulnerable to higher volatility, but someone's stepping on it every time it gets up there. What do you think?
Yeah, well, I think of it as almost like an EKG or something rather than like a trending.
And it's not in a
instrument.
coma, okay? That's for sure, right?
We'll see if it at least comes out of this little short-term coma.
Yeah.
But you're right. I mean, the volatility spikes, if you will, last typically no more than 3 to 4 days. And that's just something, listen, that's its nature. So we want to be respectful of that. And that's why when we do see these little shocks, right, that's when we don't want to panic. In fact, I'll give you another metric to watch, which kind of has this character, but it's more off the radar, I would say, from folks. This is called the McClellan oscillator.
Okay.
And it's a gauge of market breadth rather than sentiment. It's derived from advancers and decliners. And, it's another one of these things you can't look at as a trending instrument, but when it gets down into oversold territory, it's been such a great indicator of tradable lows in the S&P 500, especially year to date with this kind of tape. So it's wonderful to find an indicator like this, and perhaps it will lose some of its value when the environment changes, right? But when you have these very clear lows associated with lows in the S&P 500, that can be invaluable. And if anything, it's certainly leaning more oversold. You can see that in the stochastics.
You have covered the dollar before with us, and there is a very big debate between bulls and bears on the dollar right here. I would love your view and what you're seeing here. It seems like the dollar we had this pullback, but it didn't do anything wrong. What are you thinking? And Dixie.
Well, I think this isn't lost on anyone that there seems to be some kind of double bottom formation here, right? It did hold support. To me, that was important from a very long-term perspective with these tests down here. And yet it just can't push through this resistance that defines the double bottom. It's around just above 93.4. And not until that happens can we suggest that it's really a lasting bullish reversal, noting also that the cloud model suggests that this downtrend is still in force. So we don't have any kind of confirmed reversal yet. We have some indications of that from a long-term perspective. And probably the best, most obvious is on this monthly chart. You see the monthly MACD having crossed up. And yet not until we get some kind of breakout. Yeah, it's a big deal. It had been on a sell signal since May or June of last year. So that's
a big deal.
Yeah, it's an important shift, but with that 93.4 still intact, we have to just assume a neutral trend has a hold until it proves us otherwise. I think that's usually the right thing to do.
I have a question. The first dollar chart we looked at, it's obvious what you do when a market is underneath the cloud and rallies to it and gets rejected or pulls back to it and then rallies again. How do you treat a market like this that is in the clouds?
Yeah, when it stalls near the lower boundary, that tends to be a weaker trend, and it did not do that. So that's one takeaway. The other takeaway is that this is a pretty thick cloud. So theoretically,
it sure is. It's a cumulus nimbus.
Yeah, there you go.
Well,
That to me means that it's a little bit tougher to surmount. And I think we've already kind of seen that it's really kind of struggling in here to hold on. The upper boundary is now the next resistance according to the cloud. It's not that helpful because it moves so dramatically over time. So we're using other gauges, as you've heard.
Okay,
But it does suggest that that's just hardly in the clear, and not until you do clear that upper boundary, and maybe it happens towards the end of the year, right?
yeah,
Can we really suggest based on the cloud alone that it's reversed? But we do have those indications from the monthly MACD that that's the direction it's going. But from a short-term perspective, it just can't get out of its own way. It's really, I call this backing and filling, when you just get
Right.
short-term volatility, but real sort of sideways action overall.
how about yields, Katie? Is that a strongly neutral rating here? I thought we were gonna have a breakout in the 10-year last week over 136 and it backed off again.
Yeah, I like that, strongly neutral.
Yeah.
So it's come off an intermediate term oversold reading that occurred
Yeah.
back in here. So we're here too watching the cloud. This is a daily chart, and the cloud you can see is very
Yeah.
well defined resistance 138, pretty well aligned with the recent highs. So that's where we have a reversal of this down move going back to the March, April highs there. So that's what we've been calling for. Reason being, when you take a sort of zoom out and look at the weekly chart, you can see here's that oversold reaction. And then look at the weekly cloud. It does show some good support, and it suggests that this uptrend that began back here, albeit very gradual, is still in force. So we're
Okay,
ultimately
interesting. Look,
expecting a reversal.
you're expecting higher yields.
I am,
Okay.
yeah. And I think if we get through that 138, the level to watch is about 153, and it has twofold significance. You have this previous low in here. And then
Yeah.
again, here we can draw a Fibonacci retracement level that aligns very, very well with that level. So about 153 becomes the next resistance. I'm earlier this year, I was looking for a higher high versus that 1.8-ish level. And that's no longer seeming like it's possible, but certainly you could see it coming up close to these highs by year end.
Okay. Yeah, I think it measures the formation if we close over that resistance about 160. Is that what you said you thought we could get to?
Yeah, so the 153 level,
Okay,
once that's
53.
Yeah,
Okay.
153, but once that's clear, then the targeted level does become this 177 high. So
Oh,
I think
okay.
it really depends on how it trades around 153, if it can get through or not. And we're pretty fluid in our analysis. We'll just listen to the market as it unfolds.
Do you follow miners?
We do,
Because
yeah, we do.
the bullion has been much stronger than miners. I was always taught that in a bull market, the miners should be outperforming the bullion instead of underperforming. So they still look pretty ugly to you.
They do, and we watch. Newmont, of course, is a great bellwether in the space. And here's the gold miners ETF. It's GDX.
Yeah.
Look at its relative strength versus the S&P. You really can't make much of a case for it there. Yes, it's oversold, but for outperformance, not so much. And then look here with this just last week of trading, it's coming down through the bottom of the cloud. So as much as we like this kind of setup in the weekly stochastics and probably get some kind of relief rally here, it just won't be something that we can get on board with longer term until we see better price action out of them.
How about oils?
Yeah, the oils we're warming up to them. Let's put it that way.
Okay.
We have, a corrective phase still is underway, in our opinion, in crude oil, but it's trying to push out of it. We had the kind of ABC corrective wave. And what we're watching in the names, the energy stocks, is that they've largely come down to oversold territory from an intermediate term perspective. And even here and there, we're starting to see some downside exhaustion per the daily DeMark indicators, meaning short-term oversold readings are giving way to a little uptick. So some early indications that we're going to get a turnaround here. But I say early because we don't have breakouts. We don't have these 20 days, turning higher decisively yet for the most part. So we're starting to warm up to it. We were underweight and we've moved to equal weight, and we expect probably within the next couple of weeks to move to an overweight bias.
Okay, so I assume you're probably following natural gas issues too. Is that a similar picture or a more constructive picture to the oils?
Natural gas, it's funny because you'd expect names like an EOG, which actually is a pretty good looking chart, or the MLPs to be doing better. When you look at this natural gas chart, it's really accelerated to the upside, and you can see it doesn't matter which one we pull up, but this momentum is really very strong here. But we looked back, and we mentioned this in one of our morning notes recently, that it does have these seasonal spikes at time, and they tend to end in November. So, for what it's worth, it could be a relatively short-lived up move, something that gives way to a big retracement. But if you look on a very long-term basis, it is pushing through some pretty major resistance back here. So perhaps that retracement comes from higher levels and then also yields a higher low. So I do think it's potentially a long-term turnaround. You can see this MACD is really looking much better than it has throughout this big sort of range-bound environment for nat gas. And if anything, I would think that would be a positive for the company.
Yeah. And just the arbitrage between here and Europe, I think they pay $15,
Wow.
$16 for what we're paying $5 for right now. There's also a lot of exuberance about what's been happening in aluminum and also uranium. As uranium comes into focus about it is clean energy, could be part of the green solution as long as they don't melt down. So
yeah, I mean, there's some really good action out of these metals, right? I mean, again, if you look at aluminum on the LME chart here, look at this monthly MACD.
wow.
And again, you can see a pretty big potential breakout. I would call it an unconfirmed breakout. You have this resistance that's been cleared decisively. It's not free and clear of resistance, but as you know, the farther back you have to go for these highs, it's like the less impactful that resistance tends to be. The market's memory isn't always that long. So I would say that the developments here are positive long term.
Okay, I know that your shop is very technical, but I also know that you guys also put a lot of weight on fundamentals. Where is your shop on the supply chain disruptions that we're having that the Fed believes will be, make inflation transitory? Do you see these, supply disruptions with semiconductors and aluminum and almost everything with intrinsic value is harder to get, even ordering things online? Nowadays, a lot of stores, you'll order it and then they'll say they can't get it. Your shipment will be delayed. What's happening in ports of ships being, just sitting there, waiting to unload. What are your thoughts of, this is the first time I think we've seen it happen in our economy to such an extent. Is this something that really is going to be a driving force behind the economy, with shortages creating higher prices? And a lot of it has to do with the supply chain, not that there aren't supplies.
We actually don't do any fundamental analysis.
Oh,
but yeah,
okay.
And we're grateful for that.
Yeah, I don't blame you.
We trust the experts on that front, and it sounds like
the reporters.
Well, yeah, not the reporters, the analysts out there. But I mean, everything you say makes sense to me. And listen, I feel it myself. These supply chain disruptions. We're trying to, build a pool, and we just can't get the equipment. So there's a lot of
the
things.
Workers.
The workers are, well, yes, they're available, but it's not in the way that it was, right? I mean, it used to be so much easier. So I think in terms of my personal experience, we're feeling that certainly. In terms of the market impact, we just kind of ride the trends, right? And irrespective of what the Fed is thinking or doing right now, the market still is quite happy, in terms of the momentum. We're just not seeing any breakdowns from a bottom up perspective that look meaningful to us. And that's what, when people say, well, what's going to make you bearish? And it's not even just watching something like the VIX, it's in our bottom up work where we're looking at the individual charts. And when we start to see things like 50-day moving averages taken out on a broad basis, or or declines below the cloud. We're just not seeing that. And the semis are a great example, I think, of that, where if anything, we have a new momentum buy signal here. This is SMH. And
Wow.
you see this weekly MACD had been negative since March, and it's just getting this buy signal with a breakout to new highs. So this is another one where it's hard to make any kind of bear case around it. And even with the relative strength, especially as of last week, you can see it's really kind of picking up its head in relative terms. So the perception for these stocks in particular seems to actually be really improving.
Okay, and Katie, what's the best way for people to subscribe? Do you have any trials for people to check you out, or?
Of course, yeah. I mean, we're more than happy to offer 1-month trials to anyone who's interested, and we have, I guess it's 4 research reports, including cryptocurrency work that we publish. We publish, I think, a total of close to 8 reports per week on primarily U.S. equities, but we always touch on things like gold, the dollar, 10-year treasury yields, as we pulled up earlier, sector relative strength, technical themes, market internals. We really try to create sort of an episodic story of the markets and how people should position from a technical perspective with that in mind. And
Okay.
the website's the best place to go for signing up for a free trial, because
You
can
want to
just
show
find
it?
that information. Yep, we can do that. Bear with me here.
They don't let you do that on CNBC.
I appreciate it. So it's fairleadstrategies.com. And if you go,
Okay.
you can find all sorts of information and our recent media for those that are interested in the CNBC appearances. And here, this request a trial button allows you to put in your information. And I think you'll find that the content's very much institutional in its quality, but very much accessible to even someone who knows nothing about technicals. So,
Okay, Richard Adams is saying, I love the texts from you guys. So,
oh, good,
yeah,
good to
nice.
hear.
Yeah, so thank you so much, Katie, for
Of
giving
course.
us some looks and some ideas. And I hope you have a great fall trading season since it's upon us. And we'll talk to you in a few months. Good
Sounds
hunting.
good.
I hope that all your ideas work and that the ones that don't, you get away as clean as possible.
Same to you, Dale. Take care.
All right, Katie Stockton, everybody. Thank you very much, Katie. Hope you guys enjoyed it. Katie, you could tell by her demeanor as a disciplined person when it comes to her technicals and the company's technicals. So, talent. I know it when I hear it. So you're welcome, Monica. See you guys for Turnaround Tuesday. You could join the team in 18 minutes on the Morning Edge, and we'll see everyone. I'll see everyone tomorrow with the rest of the team. So don't just count your individual issues and equities or your cryptocurrencies or your bullion coins. Count your blessings. That's right, Sinatra. And we'll see everyone tomorrow. Adios. Thanks again, Katie.